Hi, welcome back to another edition of Judo Wall, and today we're going to be talking about the differences between a card present and a card not present transaction, as depicted behind me. And so first of all, we're going to start off with card present transactions. And probably the most familiar that you'll recognise today is when you go into a restaurant or any merchant, typically on the high street, and you pay using your debit card or credit card, they'll insert it into a chip and pin terminal. And that's the first point of presence where the merchant is engaged directly with the buyer and they have their physical card with them. So obviously a card present transaction through chip and pin and a chip and pin terminal. The second one we'll look at is chip and sign, chip and signature. And there's various use cases for these, and they're not issued very frequently, but they are issued, for example, by international banks for regular travellers to European markets. So let's take the US, for example, where they don't use chip and pin at the moment, but they will be later on down the line. And so what they do is they issue international cards that have a chip on them, but you don't necessarily have to use a pin to validate that chip. So what you do in the same way is insert it into the machines, and then they'd ask you to sign for the goods or services afterwards. Again, in a typical high street retailer, for example. The next one is contactless, or NFC. And there's a ton of this around and about in many, many markets all over the world. And some really good use cases as well. For example, where we are in London, all our transport system is based on NFC. So when you go through using your Oyster card, or even now using a debit or credit card, it will charge just through simply touching a terminal. And that NFC application is now embedded into some credit cards and debit cards as well. Generally, they will impose a limit to the consumer of around about £20 per transaction. So you can go into, sandwich shops, for example, and pick up a sandwich, but you couldn't go up and buy something more kind of high end. The last one is magnetic strip. And again, very much used certainly in the US and other parts of the world, not so much in Europe. And where we are again in the UK, but it's just where they swipe the card and then typically ask you to sign. It's a very different mentality in the US, as an example, in the way that you secure your funds on a debit or credit card. And in the US, I'm sure if you've been there, you're very used to kind of slinging your card over the table, and a waitress typically will take the card away, will process the payment, and then come back and ask you to sign the docket. Whereas in the European markets, particularly in the UK, they'll hand you a chip and pin terminal. They won't touch your card, you'll put the card in yourself. They'll then turn away whilst you put in your pin, and allegedly more secure, and there's a big debate about that, which perhaps we'll talk about another time. But now onto the important stuff and the stuff that we help you validate here at Judo, and that's card not present transactions. And that's typically, again, where a consumer or a buyer of goods would want to acquire services from a merchant, but they wouldn't be doing that face to face. Generally, they're doing that in a remote way. And so therefore the card is not present in front, or present with the consumer in front of the merchant. So it's a card not present transaction. And there's three very easy examples of this. The first one is mail order. Getting a little bit old school now, but you might see some of those old-fashioned type catalogues that you'd see, and you flick through and find the thing that you wanted to buy, or a series of things, and then perhaps tear off an order slip at the bottom, write in your credit card number and the amount that needs to be processed. You then lick your envelope, it goes off to the merchant pulls out your order form and would then process that card number through something called a virtual terminal. So they would tap in your details, and at the same time they would process that order and process the payment. The next one, which is pretty similar, but it's a telephone order. You might have heard of MOTO transactions, and MOTO is mail order or telephone order. They're generally branched in the same thing. It's sometimes, or it can be, less secure from the card networks from a fraud risk perspective, because you're not putting in your PIN, or you're not signing just to validate that that signature is the same as the card holder. So a little less secure, and sometimes the rates are more expensive. But a telephone order in exactly the same way, and I'm sure for the guys out there, we've been looking around to want to buy flowers perhaps last minute on Valentine's Day, and you phone the florist and they'll ask you for a card number. You're there performing a telephone card not present transaction. And what the merchant at the other end, in this case the florist, is doing is inputting your details again into a virtual terminal to validate that card's correct, and then we'll dispatch your goods. And the final one is for card not present transactions across the internet. And again, that's what Judo really help you do in a very cool, compelling way, certainly if you're going mobile responsive with your web technology. And so what this does is allows you to pay for goods and services as a consumer. And there's a whole series of gateway technologies and other things that are in the way that allow you to make that transaction happen online. And again, some of our other series which you'll see on Judo Hub will talk you through the differences and the way that works. Thank you very much for joining us. We'll see you again soon.